Good afternoon, everyone. My name is James Glasscock. I am one of the co-founders of a you might have heard of, working with Scott Walker, Brock Pierce, now about 20 folks on the team based in Santa Monica and Puerto Rico. If you'd like to follow what DNA is doing in the community, there's a Telegram feed called DNA Community. Just go to Telegram, it's DNA Community. Which days every other Tuesday, and we're doing a lot of other programming. It's very open source. The invitation is open to all of you. I'm super excited to talk to you today. Successful crypto investing. First person I'm going to introduce, founding partner at Blockchain Investment Group Ignite 500, Victoria, to the stage. Next up is David Bleznak. He's the founder and CEO of Totle. Totle is spelled T-O-T-L-E. It's portfolio top, a decentralized exchange. Everyone, please welcome David. Next up is Randy Kaplan, a venture capitalist. He's a co-founder of Akamai, an early investor in Google. Everybody welcome Randy Kaplan, please. And then finally, we have Michael Sonnenshein. Michael of Grayscale Investments. One of their products you might be familiar with, Investment Trust, traded as GBTC. Let's invite Michael. Awesome. So looks like I get the middle seat. Let's jump into the question. First of all, thank you everyone for joining today. My first question, Randy. I want to talk about kind of the comparison of 1.0 to crypto 1.0. So Randy, I'd love for you to guide on what you saw in the late 1990s versus what you're seeing today.
Sure. Well, good. First, thanks for having me. I knew nothing about blockchain, knew nothing what it was, and it reminded me it was absolutely ludicrous that you would trust a store online, and that was a long, convincing process over many, many years. In 1998, when we started our company, it was common to, in the order of several hundred thousand to 2 million would be a very pounds. Many of these companies would not be able to raise any amounts of rigorous for VC firms on an average way. This feels very similar to the tremendous amount of people who are jumping into the space to participate in very, very successful companies in the future built on the blockchain. The majority of the companies, as it did for the first wave of tech cars and all the big names, lose 7 out of 10 deals. That means, when you have more and more, I think the percentages will be worse, longer for those companies to go out of business. But it's a super, and it's fun to be a part of this new wave.
Accounting firm, and I invested in a company called Amazon Fraud. Today, they don't really sort of care inside of the stage. Also about some of the hype in the sector, Amazons of the world coming out of this. What's your take space for?
Just before I answer your question, though, can the audience raise your hand if you have participants down? Can you raise your hand if you have done or completed? And how many of you are going to raise an IC? Okay. So, I think intersection in the industry. Grayscale Investments, we're the currency space. We manage about $2 billion. We're attempting to kind of build the iShares. And our parent company, Digital Currency Group, is the largest venture. We now have 130 portfolio companies across 30 countries around the world. And so we've created a little bit of a center of gravity around us and have really good access to data and insights and what's going on in the world. For the majority of 2017, I woke up every day with no fewer than 25 ICOs in my inbox and LinkedIn messages of people offering to write me white papers in 48 hours for an ICO. The list just kind of not participated in a single ICO. My parent company has now, the reason that we haven't participated in them is not because as a VC deeply involved in the investing space, we are not meaningfully become easier, involving more individually, these projects being reserved for venture capitalists. It has a lot of legality We spend a tremendous amount of time in Washington, D.C. upon this. There are tried and true regulations about assets from Americans, raising assets within the United States, and meaningful misstep in the SEC's eyes. And most of the are not being done in a compliant or legal way. I think that have come through our inbox has to do with the team that's behind them. Have a track record of success and of building something successfully. Venture business, as a venture capitalist, we also wouldn't participate in their ICO. To the point that we were just talking about, it has a lot to do with valuation. A fantastic team of entrepreneurs should be able to do a venture round at a reasonable valuation, but if they were to do an ICO rather than a traditional, they should be able to raise 30, 50, $100 million at some ridiculous is none. They're at the same stage of progress of building, same stage of building revenue, et cetera. And so I have an entire concept of ICOs and kind of where they stand today. I do think that everyone needs to be meaningfully looking at those three factors as they're evaluating.
Points, and I hear you. You're waking up in the morning with 20 pitches, and your DNA sees about 60 pitches a month. I want to shift for you. I think one of the it's certainly exciting in the space. Out of this is going to come some great innovation, but you've got to sift through it. My question for you is kind of what is your special sauce for sifting through the many investment opportunities to find the projects that really speak to you, that you can get behind and support and build?
Yeah, so ultimately it comes to traditional forms of how you look evaluating the company behind it. Essentially, you're looking for three major things: a solid project with a very strong value proposition. They integrated any partnerships, any ecosystem of token, is any product or not, and what they're, as they look in the future, because a lot of ICO companies, unfortunately, they're not really building a strong enterprise. Then you're looking at it as a strong team. Is it capable of executing that project? And ultimately, we do want to look at the potential of the project to do some change and improve some social industries. So those three key elements when it comes to investing in the company. There's also different approach how side retail investors are looking into investing into cryptocurrency per se, or ICOs. And I would say there are some best in cryptocurrency and there is not so good reasons. So there is, I would say, it's if you truly believe vision of the cryptocurrency you invest in, then invest in it. If you believe in the decentralization, in the free and hard money for the world, that's one of the reasons. If you also in cryptocurrency, that's another reason to invest. And obviously, you project your net worth against the fall of the fiat. Space predicts will happen sooner or later. Invest is when you invest at the hype, when you invest at the build up by advertising, promotions, and everything else, trying to make it clear, have no clue what cryptocurrency is or understanding how it is. Those are not good reasons to invest. And just don't do it. Just learn.
I remember sort of a lot of the value was created around applications. That investors sort of really had a lot of upside. The applications and the Yahoos of the world, not necessarily the protocols. Conversation going on in the space right now around investment calls, things like Hashgraph, Ethereum, versus to talk about kind of how you think about investment opportunities versus the applications, and you might be building one of those important applications. So shed some light on that for us.
That's a good question to start off with. Thank you, and thanks for having. So at Total, to give a little bit of light, everyone understands my perspective on this topic. Building a crypto asset management platform that's built on top of our price comparison tool, kind of like the kayak for wages, and finds you the best price for the crypto asset that you're looking to. All happens on chain via our smart contracts to the Total smart contract, which then acts as a on chain. And then at the end of each transaction, the asset's out, so you have the private keys, which from a concept or Robinhood or a Coinbase or any of the other custodians, we're not funds, we're a software company, and we're just bits. And so then going on to this question about the protocols versus the applications and the value. So I think that it's interesting because on top of both of these. So that we're working on Ethereum almost as our smart contract platform that makes up the ecosystem. That protocol, there's another layer of protocols. Which protocols? So you'll see things like 0x, and these exchange systems. So then we have to, there are actual order book administrators, everyone calls them different things, that's data administrators. 0x calls them relayers, Loopring calls, so what Total does is we sit one layer on top of that. So imagine this fourth layer, we aggregate and normalize all this off-chain information, all this off-chain data, groups databases in different ways and formats, and we normalize it all to use our tool, which is UX first, focus on the user experience, and with your assets directly back in your wallet. And this all kind of came from having a tool to actually manage the assets that are in my possession rather than Binance or Coinbase or somewhere else where I don't really have possession of them. Sort of chain that I described of protocols versus applications. The protocol layers, this is, I guess, the first time where we're democratizing the finance of the protocol layers. So you can sell, they could have an EOS token sale, and then you can participate in that during the internet days. I was like 8 or 9 when you're invest in the protocol layers, and so that's in my mind that's the biggest difference. And I think that the most sits at that layer, but all these other groups are really creating. Ethereum transfers the same as if Total were we don't have a Total token. It would act for one token to someone else. You transfer Ethereum from an actual execution or how it's executed, but what they represent and what these things are used for. I think that you can actually create these ecosystems on top of ecosystems, and so can be comparable. And the question that I have going back, question is, you asked basically what you look for in these investments. I think that was your question. A lot about all the the team and all the things you look in is from a standpoint, but what we don't talk about with coins, which is really irritating, is that they don't talk about new valuation strategies or new valuation metrics, because you're valuing a decentralized system that has network of ways to measure it that's completely different than a discounted cash flow. How, especially Michael down there, I just get some at the digital currency group of, how you give it a value, because this is not the traditional world.
Right away. So you have a plethora of today. Obviously, the easiest way to get involved and play the tokens directly. There are exchanges, there are order books, there's tons of these assets. When you're talking about investing in applications, companies that are building application layers in the space, reserved for venture capitalists or those companies that have decided to ICO their entree into those businesses. Now, if you have them, you can do some of these venture-style investments, but a long time before any of these companies have a major liquidity, whatever it may be. And so as we see that the most liquid way to play the proliferation of this asset class involved in the protocols directly and buy coins directly. These investments, right, we're seed investors in Coinbase, seed investors in BitPay and Zappo, and the list goes on and on. While we and these fantastic entrepreneurs and love the value that a lot of these companies, would the value of what we've invested in be worth more had we taken that money and bought Bitcoin? We would have been up exponentially the value that Coinbase is today. Not to mention that owning Bitcoin second of every day. And so I think that that's a question that everybody approaches. Your liquidity constraints and what's your time frame?
Randy, how are you thinking about value?
Well, in a traditional venture deal, today seed rounds are more difficult than they used to be. We and other firms want to see some amount of progress unless there's something very special on a particular team. They're either repeat entrepreneurs or they went to a good team. Once you raise the seed round, you must have some degree of progress before you can raise it, and so on and so on. From the A to the B, you have to have measurable higher and higher valuations. From a seed round, B, C, D, E round, you're looking at a period of time, fully funded company. Companies are raising money with discounts, which have lower company And
The
instead,
pre-sale to the pre-sale to the pre-sale.
So you're paying 5 cents on a dollar token. Discount now is common. That means when a coin is 5 times your money. And it's time based. So 1 week you get 80, I get 60 the next week. As soon as the next minute on the clock, the discount goes down up until par. And the history of the earth has ever worked that way. And so that is very, we do in fact look at network effects of every true. By definition, you have to have a network to have value. You have to have an investment firm called Sandy. We're creating a Yelp TripAdvisor for beach. There's no definitive resource in the world for beaches, data for 148 countries around the world. We won't be successful in our company and our resource. So, and that's true of built in. Without it, the companies are not worth anything. And so, are astronomical that you're able to raise for no progress. And I'll just say one more thing on this. I was a company that I may be an advisor to. I'm finding great, young, hungry entrepreneurs with great concepts. And I was at a company that's raised dollars, and I was meeting with the founders who have really, and they were already talking about selling their company for $2 billion. I think you could sell your company for $2 billion. He said, well, I don't know, buying companies for $1 billion today. And I'm looking at, what world is he living in? He's living in a crypto because they're a hot company that he could raise another 100 million if they wanted. In the history of finance, technology, before.
You bring up a good point though, because my other biggest accountability, right? So an entrepreneur does this ICO, they raise everybody some token in exchange for this. Half the time, or I have a hard time even understanding why the token needs to exist.
Forced to invest, so the accountability is on the investor.
Absolutely, but progress of that company 6 months, 12 months down the road, 18 months down the road, ensuring that ICO has value. Are they monitoring? Are they building a sec, et cetera?
Let's dive into that a little bit. So a lot of that falls into an important bucket called governance. I'm sorry, you can't hear me. Okay, I'll speak up. It falls into a bucket called governance, and we're not seeing kind of layers of accountability once have raised money. I think we have an audience here that are either investing in new projects or that are building new projects. What I'd like to ask for everyone on the panel is, what are your expectations governance, and particularly decentralized governance that you're investing in? How important is that to you? And then also advice to everyone in the audience to expect, to ask for. With Victoria, please.
Well, it's a very complicated question, because there's different structures with different companies. Funds, if they're doing an ICO, for instance, and obviously we're looking into the fact that the company which have raised the money or is raising the money is able to actually continue building the network. If it's just a currency based on technology, the company which is able to execute a central play, that we don't want a situation when the company just raised 50, they shut down all the social networks and disappeared. And what we expect is a communication with the company, was investing from the hype to actually building the company, and building the network is very important. When the token ecosystem gets, and that's what we're looking for. We're just not looking just for token. We're looking for actually enterprise, which makes some difference in particular technology it is. With integration with a token, you have to be able to execute on that. You have to be able to communicate with your retail investor, with your institutional investor.
David,
so, I don't know.
What is the profile for governance or decentralized governance in the projects that you're building?
I really like this topic, because I really believe that there's a whole governance. I think this is the internet of organizations, and smart contracts are how. And I deeply believe this, and so I'll challenge some of the thoughts about they're great points that have been made. But the markets speak. There's people talking about these scams and we need regulation. All of that's just noise. Eventually it plays and gets scammed, and you're not following some protocols, so that no one's Vic. Vinny Lingham's done a great job. And let's see how he comes out with a standardized way that you can raise money, and I don't need 500 grand to pay the government. Now everybody trusts that protocol. There might be 15 of these protocols that are trusted because it's a free market system. That's how free market, an organization that already exists that's completely centralized, to tell us how to think it's crazy. I mean, I don't think that Satoshi Nakamoto was like, oh, a Reg S, a Reg CF, and a, you know, all of that. It's just
Randy.
No, I just...
Well, while I appreciate it on the public, I don't appreciate it on an individual company, government side, governance side. With investors expect you to be fiduciaries to their capital and effectively and wisely and in the best interest of the mission. And as I go around meeting with, strikes me as these teams haven't given a lot of thought about what to do with the capital. They've never fired, they've never paid rent, and you're getting $50 million. Them are spending huge amounts of money, their coins out there and to liquidate. And really, not a lot of these companies have actually thought about how to have a proper board of advisors who do real work, proper board of directors, the CEO reports to the board. This is a traditional governance, and you know, to your point, David, I hear what you're saying. Do this right, let the market speak. The market will speak, and that means companies are going to get shut down, they're going to have to return capital, people are going to go to prison. And it's not going to be a little amount of people, it's coming. Everyone here is excited about that. I'm bullish.
Our government,
a lot of people have raised money in blockchain, and because in extreme circumstances go to prison. It's happened in other here.
So, yeah.
I would characterize. I would characterize it just, you know, nefarious. I think what we see is a lot of
some instances. I'm not
some,
talking.
For sure.
We've had as friends,
right,
very private conversations.
Yeah.
Of people who have raised, in one case, $50 million, where the CEO is lying on his resume. I've seen another situation where a company spent $100,000 investment banking conference. I happen to know the CEO for a very long period of time on a personal basis. His resume, there were 4 things on it. So if you're raising $50 million or $100 million of capital based on resume, that rises to the level of criminality in any jurisdiction, both state and federal. And all amounts, by the way. I'm not saying.
So you need a certain resume to make money now.
Pardon me?
You need a certain resume to raise money now in this country.
No. I'm saying if you lie on your resume and misrepresent yourself on your any other company or public company, there are going to be consequences to that. Getting, you know, the amount of pitches that you are, but I go to the DNA, and in some of these, we have seen people with very material that is not legal. And I'm not. It's a small amount, but it has happened.
Michael, at Grayscale, what are you looking at in terms of governance to the ecosystems that the firm might be investing in?
Investing in, you know, large cap, you know, blue chip coins and structures around them. I did just want to touch on, you know, another, which is, you know, that this regulation is noise. This is a vibrant industry of very smart. You're all aligned that we'd love to see, again, the capital formation easier, but per usual, the pace meaningfully outpacing regulation. And so regulatably going to catch up with this industry. To Randy's point, and that are going to have an example be made out of them. About that. Every single industry, healthcare, every single successful industry domestically exists within a regulated structure. There are lines and boundaries, and you need to stay within those boundaries. If you think that you can just raise money and do it without having CC or other folks come down on you and start enforcing things where investors get to call their money back out of an ICO, you're sorely mistaken. You know, if you did an ICO last year and weren't smart enough to either sell that back to USD and bank, well, as of not too long ago, that $100 million was, God forbid, that's when the SEC were to crack down on you. Well, you have a healthy in the bank or still sitting in Ethereum to go back to and return to invest.
Saying regulation's going to get it right is completely, if regulation was the answer on all fronts, we all agree fraudsters are going to go to jail. Sure. But if regulation was right, then we wouldn't necessarily have Uber, we wouldn't necessarily have YouTube.
There's no saying that.
And the opportunity in the blockchain space is a new paradigm for
absolutely.
a totally different type of governance.
I'm not trying to say that regulation will get it perfectly. There's no question that regulation probably will not get it perfectly. But we keep getting these warning shots being thrown across the bow, right? The Dow, I mean, there's been a handful of them where the SEC has kind of come out, started in the sand so that people have a general framework that they're working. And if you don't think that that's going to continue to come and continue to gain, that's what we're all waiting for.
Just to add one more thing, I just want to make sure that some of the entrepreneurs in the room, I'm an entrepreneur at heart. I love blockchain. I'm advising companies to build companies with the right board, with the right governance, being good stewards of capital. In the .com meltdown, extreme, very small percentage, but it will happen for sure. Got sued in class action lawsuits when our value. There are firms out there who prey on this, so the minute you're getting sued by one of those firms, and that's coming too, they are so happy this crypto world is to come. But it's going to happen. And in the crash, Akamai was sued. Very honest people. Our stock price fell 99.8% in value. We went from $345 a share to 49 cents a share. Delisted from NASDAQ to 9/11 happened. One of our founders was killed that day. We had to rebuild. Every one of my founders at every company to defend that lawsuit. $10 million plus lawsuits, and that means the stock prices and the coin prices are going to be situations. I spent a lot of time with the Brightmans. I was trying to help their way out of that situation. It's been solved, but that's one that froze those assets. They had over $1 billion sitting in the treasury that they could move. The coin goes down 80% of value, 90% in the class action. You're dead. You're frozen, and you don't have the money to pay it.
Yeah.
I'm optimistic.
Thank you, Randy.
Which is another. That's the point.
I want to talk for a second about institutional adoption, and then I want to finish the panel with what excites you most for 2018. So everyone sort of start getting prepared. We'll end up starting on this end and finishing with Victoria. I know Victoria is going to bring us home on this, but real quick on institutional adoption, where are we with institutional adoption? What are the reasons? Have there been any gains? What are the barriers? Michael, please.
Yes, by and large, institutional adoption has not happened. The good thing that we have working in the institutional flow of capital moving into the space is that this asset class is no longer taboo. The popular press has done such a good job of normalizing digital. It's now sitting on CNBC every day. It is sitting on the front page of every media. And so that has now provided some air cover for more institutions to get involved. It means that they can't. I think from our perspective, seeing institutional interest in Bitcoin. I think spending more time diving in more are starting to look at investing in other to deploy capital. But by and large, institutional acceptance, we're seeing people start to allocate 50, 100, 150 basis points into this asset class because they've come to realize that they can't afford not going to be a material drag on performance for them. If it does all the wonderful do and be multiples of where it is today, it actually becomes a meaningful driver. Institutions understand that.
David, how about for yourself, institutional adoption as an enabler or as a barrier? Are you viewing that this year?
It's very unimportant. I mean, I don't really see even the reason to talk about it. It really doesn't. It's like, to be honest, it's like the only reason they haven't invested is because their cronies at the SEC and CFTC haven't passed the rules that allow them to participate in the way that's deemed reasonable. So, and the rebranding has happened in multiple areas. We've called it now digital currency, cryptocurrency. That sounds like it should be used on like the Silk Road or something. Things in order to normalize them, as I said, so that they can participate. But they can only do so at a level is pay for play. And so that to me is the whole reason space is so amazing, because we don't need to wait for them to play.
David, you don't know if all of the coins that your product will trade for people were more liquid and more capital was in the space, that wouldn't be a net benefit to what you're building?
Sure, that would be a benefit.
So then you can't ignore institutional capital and more capital flowing into the space. It is a meaningful driver that lots of applications become much more operationally feasible.
We can agree that institutions have a lot of money.
But more capital can lead to that.
So
Victoria, how does it affect your projects and how you're investing?
I agree both with Michael and David. And what needs to happen, institutional investors are tremendously important in the space. I know it's a big field. I mean, we're a $400 billion industry, right, in crypto, and it's growing, and it's going to be big. Institutional players, there is a lot of benefit to it. Now, until there is a legal and the investor, it's very hard to play into that space. What to be done is to educate the regulators who are making, creating regulatory environment, to educate them that it works, what the technology is, because there is a lot of misconception from those guys who are making the rules. And we don't want to stifle innovation, those companies to build technology, and we want some kind of helping to expand.
The same institutions that brought the whole system no less than 10 years ago. I mean,
no, we're not talking about the same institution.
Yeah, I think we are. I mean, NASDAQ said, a week and a half ago, they want to be a cryptocurrency exchange? I mean, that's a joke that we would even entertain that. Like, the fact that NASDAQ created in 1970 a entity now known nominally as CD & Co. that holds all of the assets on the stock exchanges in the U.S. Clearing house in the entire U.S. They hold possession of everything in this country. You have contractual rights to an entity that owns all the stock certificates in the United States. Authority that just has one ledger and goes back and forth, and because the system is broken and they need a new system, and that's what we're.
Can I say one thing here?
Actually, we're getting waved off. We've got a lot of differing points of view here on stage. I really thank the panel. I'm going to go to Victoria. Here we are. It's May 1st, 2018. The panel is successful crypto investing. Do you have recommendations, advice? Where are you going to focus your time for the rest of the year for successful crypto?
I'm going to look at the companies who bring assets to, asset-backed tokens. That's a very interesting play. And it's going to transit to blockchain, where all the traditional forms of ownership, like units and shares, is going to be tokenized. Yeah,
David, same question.
I'll look at I like the governance plays and the decentralized exchange protocols as investment.
Excellent. Randy.
My approach in investing in crypto-backed companies is the same we do in the venture world. I want to find great teams doing unique things with big markets. So if you're super motivated, you have a great idea, you are honest, you are stewards of capital, you're going to do it the right way, and you want to, please come find us.
Michael, last word.
Digital currency, I think they have a home in virtual reality, starting to look at the project quite a bit, and some other VR applications.
Great. Everybody, thank you.